In this lesson, we will touch upon goal setting and fully understand life insurance. Let's get started. We all know what we want, but do we truly know the difference between our wants and our needs? Usually, we do not prioritize, meaning we do not plan for the important things first and create space for the nice-to-have goals. You probably have a friend who wants to buy a flat. This is a wish, it's not a goal. A goal is when you have a decisive plan of action, one step after another, planned years in advance to buy that flat. The plan will also account for unfortunate events to make sure you can reach the goal within reason. That, my friend, is a goal. Decisive course of action, objective and reasonable. My financial goals. Now I'll do this exercise with you. We will categorize our goals into three parts: short-term, intermediate and long-term goals. We'll also make another column titled committed goals and nice to have. We have to be realistic here. We can update the goals after a year if you wish. No worries. In the short term, we have committed goals, which is about 50,000 rupees we have to pay back. Nothing in the nice to have section. This is about a 1-year time frame. In the intermediate term, we have college fees, which we need to pay. This is about 3 to 8 years now. And it would be nice to have a vacation to Dubai if money permits. And in long term, that's more than 8 years, we'd love to have a home, which is a committed goal, and a car, if possible, a passive income of 4 lakh rupees per year as a nice to have. Now you'll notice, as the time frame keeps increasing, the number of commitments also keep increasing. Create your own goal list now in your personal finance diary before moving ahead. We'll come back to this later. To meet the goals, let's suppose we set aside rupees 6,000 per month. Now, over a period of 2 years, the savings grow to 1.8 lakhs. Fantastic. When suddenly the main breadwinner of the family dies. I know it's a grim thought, but give it a moment to think about the possibility. Will the family be able to cope? This is what we will address next. Life insurance. Life insurance companies will pay your family in case of your untimely demise. Most of us do not have life insurance. We think paying a premium is a complete waste since we don't earn any returns. This is incorrect. Let me fix this thought through an exercise. Time to open a fresh page in your financial diary and fill this out. Our current expenses are expected to be about rupees. Over the next 10 years, that amounts to about. If I pass away, they will get their income from, which amounts to rupees. I want to make sure my parents or wife is comfortable. In case I'm not around, they'll receive an income of rupees. I want my brother, children to have a great education. This total cost, including living expenses, is rupees until post-graduation. In case of a medical emergency like surgery or hospitalization, my parents and wife will receive money from. Make sure your answer is as detailed as possible. Take your time. Once you are done, I need you to sign at the bottom. At this point, if you're uncomfortable, then that's good. It means you care, but never did the mental exercise of thinking of such an adverse possibility. What if you died? Will your family be able to be comfortable for the next decade? Like Raj, I hope you did not put up none in most of those fill in the blanks. But if you did, it's fine. We've got you all rattled up to begin understanding how life insurance can give us peace of mind. Now, to begin understanding life insurance, you'll have a lot of products to understand. There are different types of insurance in the market. Term insurance is the type of insurance that you're looking for. It's the simplest and most affordable. Term insurance bought online will usually be cheaper and assure a fixed sum of money to the beneficiaries of the policy holders. If the policyholder survives, there is no payout. Usually, it'll cost not more than 1 to 2% of your yearly income. Term insurance is also referred to as life insurance. They're the same product. Let's see an example. A 30-year-old male, non-smoker, can get about 1 crore cover for 900 to 1,000 rupees per month. You can see the cost per day over here. That's about 30 rupees for the monthly plans. If you go for something like an annually plan, as you see over here, the cost will slightly reduce. And you can also compare whether the insurance companies are good or not by looking at the claim settlement ratio. We'll discuss this in detail later. I'm sure this is a price most of us are willing to pay for the security of our family. Remember, life insurance gives you cash, a common denominator to acquire all assets. Now, how much insurance do you actually need? The sum insured basically should allow for basic expenses and committed goals to be met. If the sum is invested, it should give a regular return to be able to meet your monthly expenses. Now, basically what you need to do is multiply your yearly income by 10 or 12. Let's see a more concrete example over here. If you have monthly expenses of 30,000 rupees, your expenses per year are about 3,60,000. Your total needs for the next 20 years, that's the policy tenure. In this case, it's 72 lakhs. Now remember, we talked about investing this amount once you receive it because the cost of living will increase every single year by adding this 9%. We are using this Excel sheet so you can actually change these numbers to say 20,000 and all the numbers will change according to what your expenses are every month. Now, a lot of people think that insurance is an unnecessary expense. You give a premium, but you get no return. They will think they're healthy, they have enough savings, and they don't need the safety net of insurance. Let's take the same logic and apply it to schools and hospitals. They have a safety net for fire. They spend lakhs of rupees on sprinklers, fire extinguishers, safety electrical equipment every year. This is obviously done to safeguard in case of a fire. That's the key word, in case. Now say the school offered a discount on school fees to the parents to remove this unnecessary expense. Do you think a parent would take it? Of course not. We love our children far too much to take any risks. Insurance is an investment in case of an untimely death. One last reason to buy life insurance is that it's not really expensive. I'm sure you're thinking, 30 years worth of premiums paid every month. Wow, that's a lot of money. What if you just saved that amount and spent it later? Actually, this thinking is incorrect. Let's delve a little deeper. Rupees 7,000 paid in premium every year for 30 years is only 2.1 lakhs. The insurance, however, will cover 50 lakh rupees. Now let's say this 2.1 lakh, the premium that you paid for 30 years is given back to you. 30 years from now, it'll mean one family vacation. That's it. Does it seem clearer? What would you choose? The cost of a family vacation or an insurance to guarantee your family's security? I hope that choice is obvious. That's enough for today. In the next lesson, we'll go in depth of how to purchase insurance and learn about some fine prints you should know. I'll see you then.